What up YouTube? Welcome back to the Crowdfunding Demystified YouTube channel. My name is Salvador Brigman and today we're talking about real estate crowdfunding. So a little while ago I wrote a book called Real Estate Crowdfunding Explained and people have been loving that book. I recently also released an Audible version and what I wanted to do with this video is to sort of give you a condensed version. I want to give for those people out there that are interested in real estate crowdfunding, specifically the investing side, a primer if you will, a way to get started that isn't so complicated, so filled with jargon. This is really for beginners, so I hope you like today's video. So let's talk a bit about the way that real estate is traditionally funded or financed. So traditionally, the way that it works archaically, before technology came along, you would have a real estate opportunity or a real estate deal. So that could be something that's commercial, that could be something that's residential. For the sake of this, let's just say it's a multi-family deal or something really, really big, where you would have multiple investors. With the old way of doing things, the archaic way, you would have a handful of investors, maybe 1, 2, maybe 5, putting their money into this real estate deal. So they'd be putting a bit of their money, actually a lot of their money into this real estate deal. So you sort of think of it as a seesaw. You would have a small number of people putting a lot of money in order to finance this deal. So I'm talking something like $50K or more. If you're doing something your own, could be anywhere, $500,000, $1 million, a lot more, in addition to the actual bank loan, which you would get for the real estate deal. So this is just putting up, for example, the money that you need in order to acquire that loan. So this is the way that it was done historically. Now, technology comes around, and like it does with everything, it changed the way that real estate investing worked. So now, it's not just happening with a few people, it's happening with a lot of people. So taking that same example, you have a multifamily, you have commercial real estate, you have a deal in New York City or another major metropolitan area, and rather than having 3, 4, or 5 people put up the money, instead you're having an entire crowd of people who are all basically backing this real estate deal. This could be hundreds of people putting in anywhere of $500, from $500 to $10,000 in order to acquire, in order to improve, in order to develop this actual property. So you're having a lot of people put in a little bit of money in order to finance this deal. And that's sort of the basis of real estate crowdfunding. In the past, you might have discovered one of these deals for your own social connections, from people that you know in the industry, from other real estate investors, from maybe developers, etc. You'd really need to do a lot of relationship building in order to come across these deals. Nowadays, you can literally do this all from the internet. And this is my bad, it's a really bad drawing of a laptop right here. Doing this all via the internet. You can basically go on one of these different real estate crowdfunding websites. You can discover property around the country that is looking for money. These are called sponsors, if you will, that are putting up this actual development or putting up this property, and they're basically looking for you to partner with them. And you can join a bunch of other investors out there, put your money into this deal, get it funded, and start reaping those rewards of having regular monthly payments and appreciation in the actual real estate. So this is how real estate crowdfunding works. It's all done via the internet. It's all done via online portals, and specifically real estate crowdfunding platforms. Now, this is kind of how real estate crowdfunding was started. This is the original vision of real estate crowdfunding. But as it's grown, it's really changed in the way that investors get involved with real estate. So we do still have websites out there like Realty Shares. So Realty Shares really adopts this traditional view of real estate crowdfunding. Sorry, I'm having trouble writing here and talking. They adopt this traditional view of real estate crowdfunding, but then we have other sites out there like Fundrise. Now basically Fundrise, they came along and they said, hey, this sounds great, we'll try this out for a little while, but wouldn't it be cool if there's actually a REIT, a similar REIT option where investors could basically put their money into this pool, this entire portfolio? We would take that money and we would use Regulation A+ of the Jobs Act in order to then invest in different properties around the United States. So under Regulation A+ of the Jobs Act, you can raise upwards of $50 million in a 12-month period, and they decided to use this regulation in order to make what are called E-REITs. An E-REIT is very similar to a traditional REIT, but with a few important distinctions. So an E-REIT, it's E-R, there we go, E-REIT. Basically, the main way that an E-REIT is different from a traditional REIT, it still has to pay out the majority of its actual fund. It actually has to use that for acquiring real estate and pay a majority of that out to the investors via dividends. The main difference is that it is privately traded. So unlike in the public stock market, you can trade REITs. There's a high degree of liquidity. This means that if you invest in a REIT, you can easily turn that REIT then into cash if you decide, for whatever reason, I don't really like this investment, or hey, I want to get my money back. There's a high degree of liquidity with a traditional REIT. With an E-REIT, they are privately traded, so there is not as much liquidity. The other thing is that when you're using Fundrise to invest in one of their E-REITs, whether that's supplemental income or a growth E-REIT, basically they have different investing goals and they create different portfolios, and depending on the investing goals, some of those might be classified into commercial real estate, other different types of real estate. You might have 30% going into debt type of opportunities, 70% going into more of equities. It's really going to vary depending on the type of E-REIT that you choose when you do a Fundrise plan. So that's one of the major differences between E-REITs, the new way of real estate crowdfunding, if you will, and the traditionally old way. Now, the other major difference when it comes to real estate crowdfunding is that as an investor, you are limited based on your investor's status. So like, what does that mean? By investor status, I mean accredited investor. If you can read my handwriting there. An accredited investor is someone who in the past year has made $200,000 or more with reasonable expectation that they're going to also have that same annual income the next years, and also I think the year previously. Or they have a $1 million net worth excluding their house. And there's some other rules and regulations here if you have a spouse, so it might change a little bit. You can look up the definition of accredited investor for more information. But basically, these are high net worth individuals. And up until recently, only high net worth individuals could actually invest in traditional real estate deals like on realty shares. When E-REITs came along with Fundrise, that really opened up the floodgates, because now anyone out there, you listening to this video, if you are not an accredited investor, your annual income is less than $200,000, your net worth is less than $1 million per year, you can participate in real estate crowdfunding deals on Fundrise, on Realty Mogul, and it's really made just a tremendous difference in giving access to the retail investor. So I know this is covering a lot of information, and I do want to draw your attention back to my book, Real Estate Crowdfunding Explained, because I go really heck of a lot deeper in this book, but also I set up a free resource for you today, because I know not everyone is going to be interested in my book or the Audible version. You're just not a reader, you don't consume information that way. I put together a free course for you where you can learn about real estate crowdfunding. You can learn about some of the different ways that you can get involved, some of the different major platforms out there. So if you are interested in that, you can check that out in the link down below, the free course on real estate crowdfunding. So I want to leave you with a few different golden nuggets or things you should take away from this actual training video. The first point is you want to ask yourself, are you an accredited investor? This is a pretty simple yes or no question. If you are an accredited investor, that means there are a lot more sites that you can participate in. You can participate in more debt-based real estate crowdfunding opportunities. You can participate in more equity ones. You can go out there, you can learn about all the different platforms that are out there. And really, the sky is your limit. You can participate on any one. If you are not an accredited investor, then unfortunately, you're pretty much limited at this point in time, and this might change, to Realty Mogul or Fundrise, because these are the guys that are using Regulation A+ to actually make these different deals available to you as an ordinary retail investor. The second question that you're going to want to ask yourself is, what are your investing goals? How old are you? That's really going to determine whether you're going for fixed income investments or equities. So let me explain a little bit about that. So depending on your age, typically people that are more close to retirement age want supplemental income. They want income on a monthly, they want cash flow on a monthly or a quarterly basis. So they're more likely to invest in bonds or high yield stocks or REITs. So if you're fitting more into that age group, you're probably going to want to look more into fixed income portfolios on Fundrise or other websites like Patch of Land, etc. So fixed income is going to pay you monthly or quarterly income based on either rents that are collected from the different real estate offerings, that are the actual properties that are in the portfolio, or from debt, because you're investing in bonds, you're investing in mortgage-backed securities, you're investing in debt that's tied to the actual real estate. If you're more of the older age, you're probably going to have a portfolio that's something like 80, maybe 70, maybe 90. It's going to kind of vary depending on your appetite for risk, actual percentage in fixed income. And that's also going to limit your returns, but it's going to ensure your security of capital. If you're on the younger side, like myself, you have more time to grow your wealth. You have more time to actually appreciate in value the actual real estate holdings that you have. And also in terms of other types of investments like the stock market, you have more time to recover from a loss, you have more time to grow your overall wealth. So you're going to be more focused on what are called equities. There's some other names for it, but equities is a pretty shorthand, I think. Equities, basically, the goal here is to have your real estate holdings appreciate in value over time. So the actual intrinsic worth of the real estate is going to grow over time, and it's also a pretty good hedge against inflation, because as people pay higher prices, they also naturally have to pay higher rent, which leads to an appreciation in your overall real estate value. So if you're more in the younger side, your portfolio might look more like something where you're having 80% in equities or 70% in equities, and then 30% or 20% in your fixed income. So there are different types of portfolios on Fundrise, for example, and I have a really good video out there going through and reviewing Fundrise and the various plans that they offer, talking about their growth E-REIT, their fixed income ones. They also have ones that vary depending on the area in the country, so like West Coast or the Heartland or the East Coast. So different markets, different real estate markets will have naturally a different ROI and have a different susceptibility to various events that are happening around the world. Now, the third and final question that I would ask yourself before deciding whether or not that real estate crowdfunding is for you is, do you want to get involved in real estate? Do you want to diversify your holdings? If you have already a Roth IRA or traditional IRA, or you have just a basket of this S&P 500, do you want to diversify further? Because whether it's E-REITs or REITs, I think it's a great option, a way to diversify. I think E-REITs are more of an alternative investment, sort of like an alternative finance term, if you will, at this point in time. They haven't yet hit that sort of mainstream velocity where everyone knows what a private REIT is. It's still pretty selective. It's still something that's not fully caught on in the mainstream. So this I would classify as in the alternate investment realm. But the great thing is that you can literally, if you want to try this out, you can get started for as low as $500 to $1,000 on most platforms out there. It's super simple to get started, guys. I have more videos out there doing a review of Fundrise, comparing Fundrise with Realty Shares and some of the other sites out there. Fundrise definitely is one of the leaders in the space. That's why I mention them so much. And also, just in researching for my book, I talked about these guys a lot in this book, and also I share more tips and information with you in this free course that I've outlined down below. So I hope you liked this video. I hope you were able to read some of my handwriting. I know it can be a little bit difficult. I kind of have chicken scratch is what they say with my handwriting. It's also hard to just talk and also write at the same time, but I really want to sort of set you off on the right foot here when it comes to this whole new industry, because not a lot of people know about this, but still it's catching on a ton. I see people all the time reading reading my book, saying, wow, I never even knew about this, discovering different websites that are out there. So it's a really exciting time, and I fundamentally believe that technology is going to transform the way in which real estate is financed. Thank you so much for joining me on this YouTube video. Again, my name is Salvador Rickman. If you like this video, give me a thumbs up so that I know. Come subscribe to this channel if you want more videos like this, and leave comments down below. I'll do my best to answer your questions. Again, my name is Sal, and I'll see you next time.